Hello, welcome to this episode of Rich Insights. I'm Don Rich, Head of Investments for Esoterica Capital Markets. Today's topic is on the Brazilian equity market. Boy, has it been on a run. If you are a U.S. investor, a U.S.-based investor, and you bet on the Brazilian recovery, you have been paid handsomely the last couple weeks here. All right, now Brazil still has some very serious problems, right? They have some structural issues they're dealing with. They have political concerns. So I'm still, my gut tells me that this is a dead cat bounce. But we want to look at the numbers, right? Let's look at the numbers to see whether or not this move has some potential legs. All right, so let's start by talking about why the run-up, right? What's behind the run-up here? All right, so Brazilian equities have run up over 30% in the last 2.5 weeks or so. All right, that's in dollar terms. Okay, now why is that? Well, there's a number of factors driving that. The technicals are supporting it, right? For one, the technicals prices arguably overshot to the downside here. All right, so that's reason one. The second is, of course, Brazilian equities are prospering from the global beta effect, right? The overall improvement in risk sentiment is lifting all equities, and Brazil being one of those. Now, the third possible explanation here is commodities. Of course, Brazil is benefiting due to the recovery in oil prices. Now, the fourth one is huge, right? Currencies. We've seen broad-based dollar weakness, and that's been particularly important to Brazil. All right. So, in addition to these four factors that really could describe many markets, right? Many, particularly emerging markets. We've got a few that are Brazil-specific. All right. So, number 5 here, the interest rate cuts. Right, the market's starting to price in the prospect that there will be more stimulus or additional interest rate cuts in the future, right? And that's giving rise to the popularity of Brazil right now. And also, the political tensions have eased a bit. There's a bit of a truce that's been established between the president and the Supreme Court. Okay, so those are important factors. That's sort of the backdrop, right? It's some possible explanations driving this huge run-up. 30% run-up in Brazilian equities. Now, let's take a look at what else is going on here. Now, here what we're looking at is speculative positions for S&P 500 futures contracts. This chart sums up all the speculative positions across all futures markets here. All right. So what we see here now is a large negative position. All right, a large negative position. Why is that important? Well, these large speculative positions are usually used as a proxy for the hedge funds, right? And so that tells us that the hedge funds are not participating in the equity rally. In fact, not only they're not participating, they're on the wrong side of it. Oh, shit. So why do I point that out? Well, if these hedge funds were to have to cover their positions, whether there's a short squeeze or whether there's just capitulation, in other words, they close out their positions voluntarily, either way, that's further backdraft, right? Further tailwind to this equity rally. And of course, Brazil would benefit from that as well as anyone would. So, again, we have to think about that. All right, what else is going on here? Well, let's look at the numbers over the last couple weeks. Again, these are currency returns and equity market returns from May 15th to June 2nd. All right, so for the last, call it 2.5 weeks, we can see the S&P 500 is up about 7.5% during this time. Now remember, Brazil was up 30. So the S&P was up 7.5. Brazil was up over 30. EM's up about 7.5 as well. But that's not the real story here. the craziness, right? This insatiable risk appetite in the equity markets is now spilled over to the currency market. That's right, boys and girls. To the currency market. Take a look at this. The Brazilian real has increased 12.6% over this time frame. 12.6. So now you're starting to understand where that 30% return number is coming from. A huge chunk of it is coming from the currency market. And it's not just Brazil. Here you see Mexico, South Africa, a number of the emerging markets have moved substantially. Now remember, when a U.S. investor invests abroad, you not only take a foreign equity position, you also are exposed to the currency. And so you have the potential to win on both or lose on both. Right now, they are winning on both, right? So again, these are U.S. investors that are investing abroad, are winning on both, and they're winning big. But it's not just emerging market currencies. Look down here. Here's the euro. The euro has also moved 3% over this time period. In fact, out of this list of, 20, 25 currencies, we only see one with a noticeable decline. The Japanese real. So you're starting to see, starting to understand not only the performance of Brazil, but also why some of these foreign equity markets are starting to outperform the U.S. It's not that they're doing that much better on a local basis. It's because of the currency effect. So again, if you think about the 3% move in the euro, you get the European equity return plus another 3%. All right, that makes a big, big difference. All right, so when we think about these foreign equity positions, and again, when Brazil in particular, when we think about can this thing last or not last, we have to look at both the currency market and the local equity market there. So let's start with the currency market. What I want to show you here is positioning for the currency market. All right, so this is the total U.S. dollar long positions. Now, it's not just the dollar longs against the Brazilian real. This is the dollar longs against all FX crosses here. All right, now why do I point that out? Well, the dollar longs right now are essentially zero. As we look at the most recent observations, you see it's a small negative number here. It's essentially zero. All right, so what does that tell us? Well, we've had this big dollar move, dollar weakness, but the currency guys the hedge fund guys haven't been on that. So they missed the equity rally. In fact, they're on the wrong side of the equity rally, and they're missing these massive moves in the currency market right now as well. So just like we said with equities, if the hedge funds were to jump on this currency bandwagon and push this dollar weakness even further, of course that would benefit the Brazilian real as well as the other currency. So could the currency run from here? Boy, it sure looks like it could. All right. Now, let's also take a look at the equity market. Here we have the price of Brazil, right? MSCI Brazil in dollar terms here. The price of Brazil relative to the S&P 500. All right. I call these cross prices. Some people refer to them as relative prices or price relatives. All right. So this thing starts at 1 here in January. It's indexed to 1 in January 1st, 2001. And you can see where it's at today. All right. So the Brazilian equity market has, you see the small spike here. It's recovered. That's the 30% return. Look how small that recovery is in the grand scheme of things. In other words, relative to the S&P 500, Brazil is still extremely cheap today. Again, relative to the S&P 500. This doesn't say anything about the PE ratio of Brazil relative to itself. This is just the U.S. Versus Brazil. Now, while we're here, let's take a look at all the BRICs, not just Brazil, but all the emerging market BRIC countries. So next we have Russia. Russia, you can see, has been trading in a very tight band for the last few years, and it's right in the middle of that band today, right? So Russia's not interesting right now. India down here, wow, India is interesting. You can see it's by far the cheapest it's traded in the last, let's call it 5 years plus. In fact, based on this chart, India even looks more attractive than Brazil does at this point. So we got to think about that. If this equity rally continues, India might catch fire as well. It might join Brazil in terms of the outperformers. Now, China is the next one here. The C in BRIC, and you see China is also toward the cheaper end of its recent range over the last 5 years. So we pull all the pieces together. What do we got? My gut was telling me that this was a dead cat bounce because of, again, the structural problems largely, and some pretty serious political risks that they're dealing with. But you look at the numbers, and you're hard pressed to say, if, again, here's the key: if risk appetite persists, the currency has a long way to run, and equities, the Brazilian equities, particularly relative to the U.S., they also have a lot of room to run. Now, in addition to Brazil, again, you might also want to think about India. Based on these charts, India also looked pretty good, as well as China. So these are some of the other areas that we might want to keep our eye on here going forward. But right now, the story behind Brazil is well, it's not unconvincing, right? I'm slowly having to give in here as things stand. All right, so that's our message for today. I'm Don Rich. You just experienced a rich insight. I hope you've enjoyed it. May your beer be colder than the company you keep. We'll talk again soon. Thank you.